Very good morning, good afternoon, good evening, depending upon the time zone you're going to watch this particular video. This is one of the most important videos which I've made so far in my life. This is going to be on a dream topic called can I generate a net worth of, let's say, 10 crores of rupees? In case if I'm going to generate a kind of 10 crore kind of a corpus or 10 crore kind of a portfolio, how my portfolio should look like. Basically, this is not one size fits all. I mean, it's all individual, specific. But if you ask me, kind of a moderate risk taker, a kind of a middle class Indian person, and who wants to on spend, let's say, 50% of it, and what he wants to do with the remaining 50% over long periods of time. I'm talking about, when I say long periods of time, I'm talking about 25 years, 30 years, and 35 years, how the whole portfolio will look like. So I came across this beautiful book called The Seven Habits of Highly Effective People. The author is Stephen Covey. In that particular book, he talks about a habit called begin with an end in mind. So my suggestion is even if you want to build a 10 crore portfolio, I think you should have a clear thought process about how do you want to build a portfolio. So I'm going to talk about few images here. The most important image I want to talk about is in the bottommost right corner, which is on direct taxes. Government of India wants to tax each and every income that you want to make. Luckily, by the new tax regime, they're talking about 7 lakhs. If you earn up to 7 lakhs, you don't have to pay taxes. But if you want to, let's assume that you want to create a 10 crore portfolio and all that stuff, obviously you will end up paying a taxes, because even if you work, let's say on for a very long periods of time, somewhere you will get into the tax bracket, this one. So that's what I want to talk about, the first thing. The second thing which I want to talk about is on the right hand side top corner. By this time you would have seen all the things, whatever has been there. So let me go through that. So it is an idealistic portfolio. A person wants to build at the age of 60. The first thing that he wants to build is a real estate. So when I say real estate for 3.5 crores, it doesn't mean that he's going to invest 3.5 crores in one check. All that I'm trying to say is that is 20 years back or 30 years back. I'm making this video in 2023. Let's talk about 20 years back is 2003. So some of my friends had bought an apartment in Anna Nagar, apartment in T Nagar, apartment in Adayar, maybe for 50 lakhs of rupees. So over a period of, let's say, 20 years, this 50 lakhs of rupees worth real estate and apartment has kind of gone 7 times high right now in 20 years time. So do you ask me whether it will go like this over the next another 20 years? Maybe, I don't know. Maybe it may take another 30 years. But only thing is, if it's a prime property, if it's a prime area, there's a lot of infrastructure is there. 3.5 crores portfolio is absolutely possible. Another thing is, the government of India in this particular budget, what they have told is if you're going to do a transaction of buying and selling of a transaction and you want to reinvest in a house, let's say for 20 crores in Bandra or some other Kolaba or something, like 25 crores you want to buy and sell, government of India has said only the first 10 crores capital gains is tax free, even if you want to reinvest. The what happens to the rest, you have to pay taxes. So government of India is now trying to say is whatever you want to try to do something, they're bringing the tax angle towards it. Similarly, if you talk about gold, there's a gold import duty. So if you buy gold in, let's say, in Singapore or Dubai, the price of 24 karat gold in ornaments or 22 karat gold in ornaments will be slightly cheaper as compared to buying in India. Maybe if you go to Tanishq, maybe the gold rate will be good. So what I would always suggest is maybe you should have a 5% exposure to gold. Preferably keep it in sovereign gold bonds, which gives you 2.5%. So I've just put about, let's say, 5% over there. So 40% of my 10 crore portfolio will be on physical assets. I think when I said, when I, at the opening of this particular session, I said, look at kind of a moderate kind of a holding. So I said 40% is a great things to have in physical assets. Now, if you want to subscribe to this channel, you'll start getting a lot of updates that I'm going to do. And there are about, let's say, about 70 to 80 odd other videos are there on various topics, clubbed and grouped. So if you go to the playlist, you can see whatever you like, very interesting, you can go through all those kind of things. So physical assets is 40%. Now, what happens to the remaining 60%? The remaining 60% goes towards financial assets. The first thing that I would say is over a period of time, you should also look at PPF. A lot of people say PPF is giving 7%, See, look at the government. Like, government has never increased the PPF rate of 7.1% for a very long time. They will increase all other rates, even senior citizen scheme, they will increase it. But PPF rate, they'll be always less because government of India has a lot of database, and they say that the HNI people are a high net worth individual people are keeping a lot of money in PPF with a huge amount, and it gives you liquidity also. What is maybe liquidity there is that is if you go like 15 years and then start extending by 5 years and 5 years and 5 years, you can always draw a loan quickly in a matter of maybe like one business day, maximum 2 business days, you'll be able to withdraw a loan. So I said like build a debt portfolio also, because 7% tax free is equal to 10% taxable, which is really good. The other thing which I always say is that is annuities. When I say annuities, if you work for companies like Tata Group of companies and all that stuff, there's something called SAF, Superannuation Fund, which will give you. Another thing which I'm saying is that as people at the age of 45 or 50 and 55 and all that stuff, they should also look at whole life policies. When I say whole life policies, what happens is, especially when the interest rate regimes are right now very high, I'm talking about 7.5% and all that stuff, even guaranteed income products will also form a kitty, because after 50, if you want to take another term insurance, maybe the term insurance may be slightly expensive because you would have developed either diabetes or blood pressure or whatever. So typically a guaranteed income product or like a whole life product will start giving money back to you. A participating plan, it's possible. Similarly, national pension scheme is a very beautiful scheme where there are two types of account, tier 1 and tier 2. You can build a good amount of corpus, and there are some guaranteed addition products are also there. I'm saying that all these things should also be part of your portfolio, which gives you something like 1 crore corpus. Even if it's going to give you 6% return on interest, you will make at least 50,000 rupees per month, and there will be some slight growth in NPS and all that stuff. And in a whole life policy, what happens is, more your age, they'll pay you more. If somebody who is 85, he will get a lot better. And if he's 90, if he turns 90, he'll get much more better. So this is something very good. So now we have talked about annuities and debt. The third thing is that is, once you retire, I think some part of the money has to go to RBI bonds and senior citizen savings scheme. I mean, even the government has increased to 30 lakhs and all that stuff. Please note that is completely taxable. So 7% you will get, or 7.4% on an average, you will get. RBI bonds is 7%. That will give you another 7 lakhs of rupees. Correct? That will give you that much. Then, more importantly, is that as even right from the young ages, I'm talking about 20, 25, and 30, and all that stuff, you should build a portfolio on either on direct equities or on mutual funds. Where there's a professional fund management is there. Even if you start small and then give the power of compounding, you'll be able to generate 3.5 crores. And I'm talking about dividend yield plus capital appreciation. If you add these two things, it will be 35 lakhs. So on a 10 crore portfolio, even if I assume a 6% growth in real estate, easily you will be able to grow the corpus at 75 lakhs. My suggestion is that is, talk to a financial planner or talk to a registered investment advisor, or talk to a qualified personal finance professional, and then find out, are you in the right track? So always look at post-tax returns. Okay, real estate invested for long periods of time will give you much, much better. And don't ignore annuities and all that stuff. Annuities is very, very powerful. There is something called a joint life annuity. You will also get, your spouse will also get with return of premium. That is also a good one. When you, especially I'm talking about NPS and all that stuff, you can really do it. And similarly, there are plans whole life plans of 100 years and all that stuff. That is also really good, but that should not be a core portfolio. You should not start at the beginning. At the beginning, you should start only with term insurance, top up health insurance. That's what you should be doing it. And similarly, if you look at government, what government is trying to do is they're trying to remove all the, let's say old tax regime kind of components. They're trying to remove it because they don't want to give it. Even for example, let's talk about insurance policy. They say anything that you contribute more than 5 lakhs per annum is going to be taxable when you get the money back. So why people are going to do all this kind of things? Because HNIs are doing it, because they know HNIs and ultra HNIs, they know that they don't want to put all the money only in real estate. There are people who are asset rich, cash poor, asset rich and cash poor. There are entrepreneurs who wants to have this something called Married Women Property Act. Like, they want to ensure that some of the assets are completely protected. And there is something called employer-employee insurance. What happens is the employer doesn't want to give everything to the employee so that it becomes taxable. There is something called employer-employee insurance. So, and similarly, there are some private limited companies which are able to make huge amount of money and they don't want to pay 25% taxes. So there is something called key man insurance is there. So what is happening is there are smart people, they do tax planning very, very efficiently, and then they say that how to reduce their taxes, because if you evade taxes is absolutely wrong, but you can always do something called tax planning. And the next one, the last one which I'm going to talk about is called rule of 72. So Manish will actually double every X number of years. For that, use something called rule of 72. 72 divided by the rate of interest. For example, you want to double the money every 3 years. So put 72 divided by 3, which is 24%. So if you're able to get 24%, the money doubles in 3 years. On the other hand, if you're able to get only 10%, so 72 divided by 10%, it will take 7.2 years to double. So if you want to create a 10 crore portfolio, you should understand this rule of 72. And there's one more small box on this purple, this one is there. What it happens is there's nothing called timing the market, but I'm telling you, every 10 years or every 12 years or every 8 years, there'll be one opportunity market will give. At that point in time, if you get into an equity market, when the Nifty PE is much lower, let's say 19 or 20, like the one current now, what happens is your 3-year return is 51%. 3-year return, absolute return is 51%. Today, the Nifty PE is 20 point something. So even it goes a little bit more, you'll get 22%. So do a proper planning, happy investing. 10 crore portfolio is absolutely possible. And if you want to reach out to us, do an hashtag AV Senthil in Google Chrome. So you will get to know our websites, you will get to know the previous videos and all that stuff. If you like this channel, please do subscribe. Thank you very much, and looking forward to interact with you. Thank you.